And we are live.
All right, everybody. This is episode 31 of the Beef and Bitcoin podcast with your hosts, Brett and CH. Today's topics, following up on the last episode with Fed cutting interest rates, looks like the housing and real estate market is showing a little signs of slowing down here, at least from a global macro perspective. So there's a slump in the Aussie markets, and there was a great article from Jesse Colombo about the bubbling commercial real estate market. And then we wanted to finish up talking about Bitcoin versus real estate as a store of value, and why and how that makes sense. But looks like Bitcoin's getting a little interesting here today, doesn't it?
Yeah, yesterday I'm recording, literally right as we finished, Bitcoin started moving and you were texting me like 10.8, whatever, and I think it went back down. I think it was 10.5 yesterday recording, but it's trying pretty hard here to break out of just a 10.9, 1100. It was just over 10.9, now it's 10.85. So I'm pretty sure while we're recording here, might break out. I could be wrong, but it's definitely urging to break out here. I just kind of zoomed in to kind of show what's going on here. But other than that, it's on the macro side of things, it's getting interesting. I think we're just on the last legs of this cycle here, where it's like I don't know what's going to be the catalyst, or what's that black swan that's going to just like 2008, like the failure of mortgages. But like, what's going to be our black swan that's just going to take us down that abyss at this point? And I think Colombo's topic on also this Australian housing thing's a big deal, but Colombo's topic on the commercial real estate side of things is very interesting.
Yeah, definitely. It's like different bubble, same root cause, right?
Mm-hmm.
We're back to another decade of super cheap rates. And, that causes, as we try to talk about pretty much every episode, all the malinvestment that ends up giving us. And, Jesse Colombo is fantastic because he nails it exactly with the causes and the root cause of all these bubbles. And he's just really been on top of this for a long time. And it's funny because a lot of people give him shit for, bears can be wrong just over and over again forever. The market's still going up and up and up. And, eventually you're right. But I mean, you can spot this thing from a mile away. And from the, this Zero Hedge article, it just came out. The commercial real estate market, something I like to keep my eye on, just because that seemed to be what everybody remembers from 2008. And, living in California and seeing the housing prices over here, it's so out of control that you can imagine real estate feeling very bubble-like. So, one of Australia's largest development groups, the Raylan Group, they've been forced into voluntary liquidation, and they have billions of dollars worth of development projects that are pretty much just stopped. Right? They might be mid-build, put up a couple of hundred units of apartments, and now there is no more cash flow to cover those expenses to continue and finish the project, which is a huge fucking issue. And it's even impacted other industries that are within real estate. So you have a cement manufacturer, Adelaide Brighton, who's suspended their dividend after downgrading their profit forecast, and the shares dropped over 18%. And that's pretty telling. I mean, when you see dividends being suspended, that's a clear red flag, right?
Yeah, no, dividends are obviously a huge part of investing, and they make a point to hold a stock over long term, because instead of getting growth, you're getting paid to hold that stock and making a percentage of the profit. And here again, like I was obviously pretty young during 2008, 2009, but I do remember, lots of where I lived in Michigan, just lots of unfinished property. And like, I can't tell you how, when my grandpa lived, there were so many homes where he lived in a fairly nice area that were just unfinished. They were partway done, and they were just extravagant projects of, nicer homes, whether they were mansions or stuff that were just not finished, just because people had lots of wealth and then it just disappears.
Are you seeing that now? Do you see a lot of like
You know,
new housing starts near you?
not where I am right now, but you know, it's hard to say. I mean, where I am, yeah, there is some construction going on, but
Because I'll tell
still,
you, yeah, I
I'm
mean,
sure you
here,
do. I'm sure you
well,
do.
dude, in California, it's nuts. I mean, you know, I'll just driving down the highway and you look to either side, and there are hundreds of apartments or condos being put up, especially near the Silicon Valley area when you get closer to San Jose. Um, and I'm just sitting there looking at them in the middle of a build, and I think they're Toll Brothers houses, the majority of them,
Mhm.
which they're an East Coast company developer, and I'm thinking to myself, who's going to rent those when the market kind of takes a turn for the worse and people start losing their jobs? Like there's so much being built, even in the town where I live. There's more apartments being put up, and everything's in the middle of the build. And I have a feeling we're going to be seeing a ton of vacancies, and that's where things start to get out of control, right? Because you have all these sunk costs into building big development projects on the expectation that those will be finished within X number of months, and they'd be fully rented out at a 90% occupancy rate 12 months from now. What if that what if that occupancy rate is zero because the project can never get finished? Then you're forced to then, as the railing group is, they're being into forced liquidation, right? So all of those assets end up getting liquidated because they were borrowing cheap money with the expectation that things would just keep going very well for them. And yeah, I'm just seeing it here, at least on the West Coast. Like so many more buildings are going up, and the rents just keep rising. Like you would expect if the supply of apartments were increasing, rents would decrease, but that's really not the case.
Yeah, and as I'm reading here, it talks about, and I'll highlight it for people who are watching on YouTube. And it says the administrators are still concluding an initial investigation as to why the company collapsed. In the case of I'm going to botch this, Adelaide Brighton, it warned that its underlying net profit would fall to 120 to 130 million this calendar year, a 37% drop compared to the 190.1 million profit it earned last year. Um, and there's lots of things to blame. But they talk about one of the big things is sustained increase in raw material costs, inflation, and that's a big thing I've noticed when you look at the auto industry, when you look at homes, look at groceries, everything. It doesn't seem like a lot, but when you're a company buying tons and tons, thousands of tons of material, whether it be steel, iron, wood, cement mixer, whatever you name it, and even if the cost goes up a few percent, that's chewing away your profit margins.
Right. These margins are already pretty thin,
Mm-hmm.
right? You're operating on razor thin margins, and the cost of goods sold increases. That's going to cut into that. Combine that with maybe raising the minimum wage. Now your employment expenses, your salary expenses go up again, and margins keep getting compressed and compressed, and then all of a sudden interest rates go up. People stop buying shit, and that's when you see these revisions and forecasts of profitability out, say, a year from now or a couple quarters from now. They see it coming a mile away, and then what do you know? Here comes the Fed with a rate cut. And the last time this happened, it was too late, right? There was nothing they could do, and we will find out very shortly here if history rhymes, right? Will it be the cut that ended up not really working and send us into another recession? I mean, we're seeing that here play out right now. So it's something that we're always going to keep our eye on, but it's not a coincidence.
Yeah, it's one of those things like the perfect example is, and I believe it's January 2008. There's a quote of Ben Bernanke: "The Fed does not forecast a recession," and lo and behold, less than 9 months later in September, shit was hitting the fan. There was a possibility that banks wouldn't open on a Monday. I think it was like September 20th or 21st, that banks wouldn't open on a Monday because no one would lend to each other. Um, it really can go downhill quickly. I know 9 months doesn't, oh, that's a long time, but it really isn't. Like, as we talk about, like, it seems like, we've been in crypto forever, forever, but then you think about, wow, it's been 2 years and it seems like it's flown. Like, the last year has felt like it's flown by, um, in relative comparison to the first year in crypto. And, it's just one of those things where it's like, yeah, things might look good on the surface now, but what's really below it is something you have to keep an eye out for.
No, absolutely. And I think this is, when I think about the I think it's different this time around, right? It's 2019. We have more access to information than we did the last time. So it's easy for the average Bitcoiner or person to become an investigative journalist and see the global macro picture kind of morph around them. Like, we're getting this data from Australia. We're seeing the commercial real estate bubble in our own country. You're seeing it globally. It's on one hand, like, it's sad, but on the other hand, it's cool because we can actually see it playing out in real time, which I don't think would have been the case in 2008, right? It wouldn't be all of these macro guys posting on Twitter saying, like, you know what I mean? Like, that whole thing didn't exist. You didn't have a Jesse Colombo being able to have a huge following, sending out tweets, letting people know what was about to happen.
Yeah.
And this time around, like, think about it. Podcasts are huge. YouTube is huge. Instagram, Twitter, like, you can get this information out to people now. And if people are, willing to take a couple minutes and open up their eyes and look for it, they can get it. And, that's why we like talking about this stuff too, because, there's surprisingly a group of people who are interested in these topics. They recognize Bitcoin for what it is as this digital store of value. And you can see it start to, slowly and surely get bigger, and the rest of this global macro picture that's subject to the fiat monetary system is mispriced, and it's been mispriced for a long time, and you're seeing it start to get back to reality.
You couldn't have said it better. The reality portion of this fiat cycle, the liquidity has been just pumping, and I think we mentioned it last podcast. I think we'll record it last night. It's not up yet. But and we might mention, but basically the Swiss, I think it's a Swiss National Bank or SNB, whatever, I might be saying it wrong. Anyways, their central bank is like now has a record holding of U.S. equities. It's like 93 billion now. So when people wonder who's buying equities, here's the fucked up thing. They're printing their own money to buy U.S. equities, which is keeping U.S. equities afloat. And that's the insanity of the cycle we're in. And the other hard thing is, it's hard to say, things will really go downhill if everyone, because it feels like always on like FinTwit, everyone thinks everything's going to go to shit, and we just keep going up. So it's really hard to, are we just going to have to, like, I don't know, will we melt up? Maybe, I don't know. It's just hard to say because things are so much different now that we have quantitative easing. This cycle is different because that's just such a different factor. We haven't had that in the past where Japan had quantitative easing in 2001, 2006. But it wasn't the whole of the global, economy was being pumped by every central bank. But my point is that you have all these banks pumping money in the system that's different than, previous years in the last 30, 40 years. And then on top of it, we have ultra low interest rates or negative interest rates. It just doesn't, it's different in that sense. So things can be distorted for much, much longer. But the reality is at the end of the day, the free market will win, and There will be pain, and there has to be pain. As I think you and I have mentioned, there's a whole generation of millennials that can't raise a family, can't buy a home because the prices are just so, pardon my language, fucking through the roof. Like housing prices just absolutely through the roof, so it's really tough and the same thing with equity, same thing with bonds. Bonds have no yield, and we talked about that. I think we might have played this clip about, Bitcoin and crypto. Was it Raul? I can't say his name. His name, Raul?
Yeah, Raul, I think.
Yeah. He's a macro investor, and I'll try to find the clip if we might have played it already, but the point is like it's left a whole, younger generation, a millennial generation with nothing but like the Bitcoin and crypto space to look at, that has that asymmetric return that the baby boomer generation was left with bonds, real estate, and equities in the early 80s. They were, as he said, they literally could have bought bonds and equities and literally went to the beach.
Right, right. I mean, you were at a point in history when um, the expansion of the money supply hadn't was just kind of getting started, I guess, or before it really got out of control. So you had a good chance to get into a lot of fantastic investments and ride them out for the long term. You have pensions, 401ks, IRAs, real estate. I mean, so much of the wealth has been transferred to them in the last 30 years. And, you have the younger generations who are like, well, what the fuck else am I going to buy? They're not going to buy homes because they're too expensive. They can't afford it. They're going to rent forever, pretty much, and they're having a tough time, starting a family and securing a high-paying job. I mean, it's fucking tough out there, but it all makes sense, right? You can kind of whittle your way back to the root cause of these things, and you can see the expansion of the money supply and contraction of it causes these boom bust cycles. Even though they like to call them the business cycle, it's really just a credit expansion cycle. And we're seeing it play out big time, as Jesse was talking about, in the commercial real estate bubble. And he kind of nails it with aggressive central bank stimulus programs have inflated this bubble alongside of stocks. Student debt, government debt is through the roof. Corporate debt, household debt is like getting closer to an all-time high, I think, if not at its highest. And rates were kept down to stimulate the economy. You had a ton of new real estate projects due to the low borrowing costs, and now you're seeing the repercussions of that as the market starts to contract again. Even, in my town, when I walk downtown, there's a lot more vacancies. And as you can see on the screen here, it also goes back to potential store closings, right? So it's expected that 75,000 retail stores are expected to close by 2026. So when you combine that with an inflating commercial real estate market, and then 75,000 retail stores closing over the next 5 years, 6 years, what you're going to have is the tenants who are, occupying those, occupying that commercial real estate won't be able to pay their monthly mortgages, right? So you're going to have default after default, and that can get downward spiral like pretty quickly because people are going to have to unload to cover their own debt and sell at a loss pretty much.
Yeah, exactly.
So I think yeah.
And here again, as you mentioned earlier, about all those bubbles that Jesse identified. The funny thing was the Fed, recently, I think it was Jerome Powell stated that the Fed doesn't see any bubbles right now currently or anything. And it's like, dude, put some fucking glasses on. I mean, you look at housing prices, you look at the student debt's like the perfect example. Like, why isn't that a bigger topic? Why isn't that a topic that, like, I mean, obviously stocks are pretty bad, but student debt's one of the worst examples where you just have this inflating bubble, and I know more and more kids that are my age who have student debt are just like, fuck it, I'm not gonna pay. You're like, well, if I don't pay and then he doesn't pay and she doesn't pay, they can't come after all of us type of thing. And I think to the next downturn, that's going to get just exasperated so much more, because if like a perfect example was at my work, I was there's two airline pilots, and one of the airline pilots was talking about how he was paying his student loans. He was paying up until recently, he was paying over $900 a month, and that's a shit ton a year. It's over 10 grand a year, just out the door. That's going to that's just getting wasted. So it's 10 grand a year you could be investing elsewhere, 10 grand a year you could be putting somewhere else, and then now he's paying like $770. It's still like, holy shit. And you got to think about it. When the economy does really hit the shit, because it will. This is a cycle. It's not going to go on forever. It will continue longer than we think it will, as it always does. Um, there's going to be a lot of people who are going to be forced to the choice: do I pay my student loans this month, or do I feed my kids?
Right, right.
Like
That's
in his case, he
exactly
has
right.
two kids. It's like fuck, you know. Um, it's one of those things that's just it's going to get really exasperating, and I think it's this is going to be a very long recession, depression, whatever you want to put it, just because that we didn't get it in 2008, 2009, where it was very sharp, but we rebounded very quickly because of easy money policies and just cutting rates to nothing.
Right. And I think, to kind of push that into the next topic, you have, someone like that airline pilot, right?
Mm-hmm.
Your average person, let's say they have $50,000 in student debt. Maybe they're recently married and they have one kid. You're spending $1,000 a month, assuming one of your family members has student loans, right? Maybe the husband and wife both have student loans. So combine that, you're over six figures. Spending a couple grand a month on student loans. You can't afford a house. Um, Maybe you're leasing your car, maybe you bought it, and you're thinking to yourself, well, do I want to buy stocks, the things that are at all time highs, right? Or do you look for that asymmetric asset, right? That's where kind of Bitcoin comes into play. So you're saying to yourself, okay, well, um, where do I put that extra money that I have, right? I'm paying off my student loans, trying to survive. I have a little bit of money left over for my future, maybe for my kids or something that I want to be able to save for my future. You can't leave it in cash because your cash is pretty much fucking worthless, and it's inflating away over time. Does Bitcoin start to make sense for that average person?
I think it does in most sense, like even just a tiny portion of your assets, even not much. I think it's again having exposure to it. There's so much upside and so little downside, especially after seeing the speculative mania we saw in 2017. It's very hard to say there's as much of a downside as there's upside. I mean, if, say you have, let's say you have $1,000 you don't care about, you just put it in there. I'm pulling a number out of my ass right now, but I'm just using it because it's a nice round number. You know, it's one of those things where it's like you're probably, as Raul was saying, the asymmetric return on that $1,000 is a lot better than it would be investing in any fucking company right now. Literally anything. Whether you look at Square, which is a great company, but it's just so overvalued at this point that there's not much. I don't see much value if you bought now versus waiting for it to really tank.
Right. No, I mean you can take that $1,000 and say, all right, I'm willing for this to completely go to zero. Um, what's that risk return look like? And you can say, okay, well, the Bitcoin experiment fails, I lose $1,000. Or your potential upside is Bitcoin is a drop in the bucket right now in terms of market cap. And if it moves into becoming a $1 trillion asset or into the trillions, you're looking at 10x, 50x, 100x returns over years to decades. Do you take that gamble with $1,000 or even $500, or say you're the person who has the Cash App installed on your phone and you're like, yeah, man, I buy $5 worth of Bitcoin every day because that's all I can afford, and I'm just saving it for my future. I think there's a lot more people that are doing that than we think. I was going to try to talk about this in another episode, but Square's or Cash App just released their financials. Square released their financials, and Bitcoin sales are like exploding for the past quarter. So I think there's a lot more people out there that are stacking sats who are thinking kind of what we're talking about right now. Like, all right, well, I have a limited amount of money that I can invest for my future. Fuck it, I'm just going to buy Bitcoin with it. And I think that starts to make more sense as the price goes up, right? We always like to talk about the price driving adoption. Who cares about Bitcoin at $1,000 or $500? But once it breaks that new all-time high, once it's back above 20K, once it broke 12, 1300 in 2017, all of a sudden it's like, whoa, what is this? Maybe I want to get a little exposure to that. And I think that as the price continues to rise, wherever it goes, it becomes more attractive to people, right? Because people like to make money. Human greed is there's nothing even wrong with it. You're just wanting to make money to take care of yourself, and that's perfectly reasonable. And as the price increases, that will 100% drive the adoption. And I think every person has their own price at which that light bulb goes off, where they say, I better jump down this rabbit hole and see why Bitcoin works, why it's not dead, why it continues to thrive, right?
Yeah, and I'm trying to find, for the life of me, I'm trying to find that Raul clip.
Oh yeah, I think it's on if you search for Stefan Livera, you'll find it.
So I can't find it. I was trying to search the word DMs and it just stopped searching.
Yeah, it's in Stefan Livera posted it. If you for those listeners, definitely check out the Stefan Livera podcast. He's got a lot of really good interviews with that cover a lot of the topics that we talk to.
Did I spell his name right? I probably did.
Stephan.
There we go.
No, yeah.
But he doesn't have a blue check mark.
Nah, blue check marks are
overrated.
They're a bad sign.
It's overrated. Let's find this. I gotta find this. It's such a good clip, and it's like 40 seconds long.
Yeah.
Okay.
Keep going. It's one of those. But a little background on this clip. I think I know which clip you're about to play here. Raul pretty much is talking about the setup that the boomers had going into their working career of just, putting money away into their 401k, retirement, pension funds. They just made a boatload. It was easy money. And they were, spending their time at the beach. And now you have the next generation who's like watching I have a corporate job. I've worked a corporate job for a decent amount of time now. And you look at the boomers and their capabilities, and you're kind of like, what the fuck, man? I can't believe this dude's making, over six figures and he can't even open a PDF document. It just gets really frustrating. And then you see, and like they're super caked out. They have the beach home, they have this, they have that. And it's like, what did I waste all my time learning these skills for? Like, you can't do shit. It is frustrating. And that's not all boomers. There's a lot of them who are highly technical, brilliant people. But, the average Joe who, just made out really well. They crushed it. All right, I'll let you play this clip.
Yeah. So it's Raul. If you want to follow him on Twitter, I highly recommend. It's at Raul GMI, which is Global Macro Investor. It's RAOUL GMI. And here's the clip from the podcast.
This is the millennial generation. The millennial generation, well, if they were to buy equities at this point, they're the most expensive they've ever been in all history, roughly. If they buy bonds, they get virtually no yields. If they buy real estate, well, it's unaffordable. But even if they could, it's almost at all-time record highs. So what the hell does a millennial do to save for your future when almost all assets have negative imputed returns for the next 20 years, 10 years? And the answer is, well, why don't you take the optionality of cryptocurrency and Bitcoin? Because nothing else gives you that risk-reward profile where you can be wrong, but you do it early on. You've still got plenty of time to accumulate wealth in other assets too. But if it pays off, it'll pay off so spectacularly that everything will be right. It's basically like being given a better chance than the baby boomers got when they could buy equities in 1982 and bonds in 1982, right? That was a gift. That's why they're the richest generation there's ever been. They were given a gift. Equities were trading at a PE of 7 in the US, and bond yields were at 15% in the US. They basically didn't have to do anything but buy bonds, buy equities, and go to the beach.
Yeah, I mean, that clip is a minute and 20 seconds, and it perfectly sums up everything.
Totally. I mean, he's right, and I like that he has such a good macro sense to it. Like it brings a lot. It brings a lot of color to, what people like him are thinking, and
that's right. It's me.
They're making moves and moving money around, and they're hedging accordingly. So I feel like there's going to be a lot of documentaries about this in like 5 years. You're going to have this different point of view from all of these different types of investors who are kind of watching this play out. And I've been thinking about that a lot, actually. You have, Bitcoiners who are seeing this happen. You have these global macro guys who are seeing this happen. You have the Peter Schiffs of the world. You have the gold bugs who are like, I told you so, the Federal Reserve. You have a different point of view from everybody, and everybody's kind of seeing the same thing, but from a different point of view. And I think that's what makes this one kind of special.
Yeah, and he does a pretty good job because obviously he's not. I don't think Raul, from seeing his content, is a huge Bitcoin guy, but he perfectly.
Oh, he's a pretty big Bitcoiner.
Okay, really? I don't follow him.
If you listen to that podcast, he definitely gets it. He was a buyer, I think, in the $200 range, and ended up selling at $2,000 actually.
Well, he 10x. He 10x probably a lot of money though.
Oh, for sure.
Yeah,
but,
like a 10x. So that's what people don't get. Like when you think about 10xing, like if he even 10x to 100K, that's $1 million. But if when you talk about guys like that who have money, that's what like. There's a perfect tweet, and I'm going back to somebody who's a crypto trader. I think it was Roy. I don't know if it's still his name, but he posted something about people talk about flipping money or whatever, making big returns like 10, 20x. But he's like, when you talk about just doubling $1 million, that's a lot of money versus
right.
You could 100x $50, but still not doubling $1 million is better. So it really is something when you think about bigger money. And that's why compounding returns is so important. And just, that's what they always talk about investing. It's just compounding your returns over the years because it just continually grows. And then that 10K that becomes 100K becomes a big deal. But then if you double that 100K, it becomes 200K. You know what I mean? So it just keeps getting better, along the route. I have this clip I sent you, and it's just...
This is hysterical.
This is great because this is... it's by JT Stockmaster 2000. I don't know if this is actually him.
His handle's the best.
Yeah.
Stockmaster 2000.
But the point is that, like, if you watch any of CNBC or the financial media, they've been pumping, like, shitty stocks. Perfect examples like Uber, Lyft. Beyond Meat's one of the worst examples because, one, it's just absolute processed shit, and I will say it here out loud. It is a load of horse shit. And then, two, it's just way beyond its value. Its value does not match. Its market cap does not match its revenue. It just doesn't. It's nowhere near it. But I'm going to play this clip. It's 1 minute and 30 seconds long. It's just really funny.
That's right. It's me. It's Uncle Jay, the guy who hates Beyond Meat. Even more than that, I hate these analysts that are raising price targets. Who the hell are these people? They need to be fired. Everybody's so afraid just to miss the run-up that they have forgotten to do their jobs. Along with the people that are writing articles this morning saying that Beyond Meat is so busy. Oh my God, they did a secondary because they need the money to expand. Let me tell you something, assholes. I don't know what kind of schools you go to for journalism. They're letting the insiders out because they can't get out the door fast enough. They are raping the shareholders. This is the problem with Wall Street. This is what Elizabeth Warren should be screaming about, not Wells Fargo. They're that bullshit. The insiders want out. The billionaires want out before the stock crashes. The company sold 250,000 shares of stock only so they had some kind of optics that they didn't look like they were complete and utter thieves. There is no way any analyst on Wall Street can justify the metrics. Doing so is irresponsible. It goes against what your job is supposed to be in the first place. It's disgusting. You're like the idiots in the dot-com boom. This is one of the most offensive things I've ever seen. And then the fucking owner of the company has nerve to sell stock. I can't even speak. I'm so angry. The insiders are selling this stock at the top, in your face. All while all of Wall Street's telling you, this is a trendsetter. This is the best thing that's ever happened to Earth. And yet they can't get the fuck out fast enough. This is disgraceful. Don't kid yourself. This stock will break $100 and it will go to 50. This is ridiculous.
He put the nail on the head there. The financial media has just been pumping Beyond Meat. And as I've seen with numerous tweets, people talking about basically people aren't buying it in stores. Now, they might be getting huge corporate orders from like the companies that decided to say, hey, we're going to virtue signal and put Beyond Meat on our menu. But are people actually buying it? That's the real question. I call bullshit.
Yeah, I mean, that's just a simple PR campaign, right? Tell a couple people on CNBC, tell a couple of influencers to start posting about Beyond Meat. put it on Robinhood, get everybody excited, pump the fucking thing to the moon, and let the the shareholders dump their bags. And he didn't really hold back, which I liked about Stockmaster 2000. I mean, he told the truth there, big time, and it's difficult to hear, but kind of is what it is.
Yeah, no, I just tossed him a follow. He deserves it. But like again, Beyond's chart, like I think I called the other day. I was like, when that huge ass doji on July 26th, I was like, well, that's the end of vegan investors, and it's down over, 25-30% from there, and it's only going to go lower. There's nothing supporting the stock. The metrics, as he said, do not make any sense. There's also a giant gap to fill here. So at a bare minimum, we're going to go to 109. I'm just going to say Beyond Meat's going to go to 109, and it's going to go much lower. I would not I would not be shocked to see this as a single-digit stock, whether by year end or just really depends on how the macro plays out. But I think this is another example of the excess we've seen in the global economy here, where none of this makes sense. Why would a company with only $100 and some million in revenue be valued at $15 billion? It just doesn't make sense.
Right, and that's why I feel like I feel like we could see a kind of like a global repricing of everything, just because I think everything is out of whack. Like it's gotten so bad, just the prices of shit, that it wouldn't surprise me to see a lot of stuff get repriced back to fair value. And I don't know what that looks like in a case where we see a lot more inflation. So that's where like I'm not so sure. So you'd have to say like, well, in today's dollars, things would get repriced. But what does that look like if we see more inflation than we were expecting? At least price inflation. So it's tough. It's tough to say. But I don't know. What do you think? Do you think we'll see a big repricing of a lot of assets here?
I think it's only inevitable. It is, was it mean reversion? I was going to say reversion, but yep. Mean reversion is inevitable here. And I think Beyond Meat, just another example like Uber and Lyft, where like Uber and Lyft, great ideas, not business models. They aren't profitable. They aren't going to see profit. And that's like Lyft's like perspective. It's like, yeah, we might never become a profitable company. It's like, wait, so you went public just so your shareholders or your inside investors could dump their bags on people's heads. Right.
And that's where, the manipulation of interest rates kind of comes into play. These and malinvestment comes out, right? Typically these businesses would have to be profitable in order to operate, right? They'd need enough cash coming in the door to pay their expenses on a monthly basis. And that doesn't need to be the case when you have money being injected into a lot of these businesses. And I think there's a lot of businesses like that. And I think even from like a smaller retail perspective, I think there's a lot of small businesses that are like just for fun that people are doing to like something to do, and they don't actually make money. And those will be part of that 75,000 retail businesses that will close within the next couple of years. And that will help to pop that commercial real estate bubble, because they won't be able to pay the rent, and then these developers won't be able to cover the loan or the debt service agreement, and then that's kind of it. Boom, you're forced to sell, and prices start to drop. And we've seen it before. We'll see it again. It's just it could happen. Like the bubbles could pop at different times in different locations, and to different extents. So that's where you have to just really keep your finger on the pulse and be on the lookout.
Yeah, Uber is still a $68.5 billion market cap. That's just not right. They don't make any money. They don't have, it's again, these IPOs were simply so insiders who wanted to sell large blocks of shares could get out. That's all it was. It's unfortunate, but that's the reality of what it is.
Yeah, it's not, and that's not like conspiratorial at all. That's just people trying to get out of their position and make as much money as possible. And there are people who are willing to like take those bags off their hands, right? You don't see any of the people on Robinhood complaining about buying, the stock versions of shitcoins. They think that they're, going to be just fine, and this is like a good investment for them. They go and learn today, just like everybody who thought they were becoming a professional trader in 2001. I had people at the office telling me like it was crazy in like 2000. Everybody was making money. It didn't matter what you were buying. Like everyone thought they were a genius. And then like pop, pets.com, boom, dumb idea. Like everything, and you could say we kind of saw that in the 2017 ICO bubble. It didn't matter what you bought, you were crushing it. That's done. That's over with, right? There are no more ICOs. Nobody's raising funds because that scam is kind of nobody's going to fall for it again. So now you're seeing different things start to pop up. Securitized tokens, exchange tokens, whatever. It's fine, same scam, different name, and that's okay because there's demand for these tokens, but not everybody there, but asymmetric information exists. So you still have new investors coming into the space who are just like, I'm just trying to make as much money as humanly possible here. So, they have unit bias and go for the cheapest coins to then try to pump their bags. And that's a shame because they will most likely get wrecked in the process.
Stock that I don't even mention this, but stock I'm watching is Shopify.
Whoa.
Yeah. No, it went nuts from that December low. Like it looked, when everything looked like it was just like, oh, we're going off the cliff, and then the Fed completely flip-flopped and everything pumped. It just went crazy, and it hasn't stopped at all.
Shopify, yeah, I think we actually use Shopify for the Crypto Humor site. That's pretty funny, but that looks like trash. Good luck. I mean, it
looks good. Well, it's good.
I mean, it looks great.
it looks great if you bought early. It's trash if you're buying now. Is what you mean? Right. I think it'll be interesting to see where this monthly candle finishes. That's what I'll be kind of watching, because this just went completely parabolic. So. In parabolic rises only go for so long, and obviously it's hard to say when the top is, but I think like if you see a nice monthly doji, that'll be a good indicator of RIP for Shopify.
Definitely.
It's going to be interesting. I don't know. It's just going to be one of those things where we're going to see a lot of, stocks that are just, let's see the market cap, 37 billion.
For Shopify?
Yeah, 37.38.
Yeah, that doesn't make any sense.
Yeah, I don't know what their revenue is. I'm curious to know if Shopify 2018.
I mean, it's definitely used. I mean, we use it for...
I know it's used.
For like all the shirts and stuff that we sell on the site. We put our designs on there. People come in, order them. It's, it's drop shipped. I mean, it's fantastic. It's great, but...
Here you go. Shopify annual revenue in 2016 was 0.38 billion. In 2017, 0.67 billion. 2018, 1.07 billion. So it's 37 times sales right now. It's getting up there. Yeah. And obviously sales will go down for Shopify as, the economy goes to shit because people will stop buying things off the site.
Dude, and I can tell you that firsthand because as soon as the bear market started, people stopped buying shirts.
Oh, I bet, dude. I bet you got hit hard there.
It's funny. So if you think about the Bitcoin space as its own little economy, as we had a recession in 2018, I saw everything stop. Engagement stopped, the like stopped, followers slowed down, zero sales on T-shirts. I mean, people were buying shirts left and right. Coins were pumping. Everyone was excited. They wanted to, buy a shirt. And then the bear market came and it was all crickets. And that was its own little mini economy, right?
Yeah.
Now you're talking from a global perspective. If people aren't buying, $20 T-shirts during a bear market, but the economy is quote unquote doing just fine, what do you think people are not going to buy when there's actually a recession, right? I mean, a lot of stuff that people do, they will not be doing anymore. And that has repercussions. That's when the malinvestment kicks in. All of those really shitty ideas take the mask off because they look like good ideas at the time, and now you realize, oh well, if there's not cheap money, nobody's actually going to spend money on this shit.
Yeah, it's one of those things where it's like I obviously didn't get as much engagement as you, but there's that noticeable engagement through the fall of 2017 into even January of 2018, but then obviously just dropped off the face of the earth after that, And even like what's funny is like even after Bitcoin, like people forget like Bitcoin and the whole crypto market rallied quite a bit in April into May of 2018, like quite a bit, and still the engagement was nowhere near what it was prior.
Oh yeah.
Yeah,
It's pretty much, yeah, it was pretty much dead. But I mean, it's nice to see it picking back up again. So I wonder if you'll see like this flip flop of like, the Bitcoin economy is, feeling prosperous as the price is increasing, and everything else is turning bearish. I don't know. This is probably the most exciting time to be in Bitcoin because, we're teetering on the edge. It feels like we're entering this global recession. The halvings coming up. You have futures trading. You have physically settled derivatives trading. You have more and more people getting onboarded onto the system, and it's getting back into mainstream. It just seems like it could be this weird perfect storm that we really need to see how Bitcoin does in a really shitty economic environment around it, right? That fiat system, if that's going to shit, how does Bitcoin handle it? And I think that's the question that everybody has, right? Me being like perma bullish, it's like, well, anything's good for Bitcoin. Like it doesn't matter what's going on. If the economy's great, okay, perfect. It's a risk on trade. People are going to buy it. If the economy's going to shit, they're going to say, oh fuck, like safe haven asset. Where am I going to go now? Maybe I need a little exposure to Bitcoin. That's the way I kind of approach it. But this is the test, and we're seeing it, but with just all these different industries seeing bubbles.
Yeah, so I'm looking. I just scrolled through my old DMs just to go to the Instagram DMs, and I don't know if you remember crypto for Columbus.
I do.
The last message I have to him, I think it was something I mentioned him in a story, and he's like, "Insanity, LOL." And this is on January 10th, 2018. So this is when altcoins peaked, basically. This is when the second. Yep. And I was like, we're fucked. My phone's blowing up. And I said, we're fucked. My phone's blowing up with people wanting to get into crypto. And I was like, $1 trillion, here we come, because we're at 830 billion. And I thought we had that one more push, and we didn't, obviously. But yeah, dude, I'm looking at my DMs there, and it's just retarded.
Yeah, everything stopped.
Yeah. No, it's bad. And it dead halted pretty quickly after that in terms of crypto. I mean, I just tell people it was nowhere near as bad as like there's just constant DMs here and they're all crypto.
Yeah, I mean that's where you can see the emotions really come into play. I mean, the people who kind of got me into the Bitcoin and crypto space in 2017, I didn't hear a peep out of them like all of 2018, and some of them just started DMing me now actually, and so a lot of them were big Ethereum bag holders, and I don't think anybody decided to kind of do their homework in the bear market, and there's still a lot of heavy bags out there that haven't capitulated or seen the light, I guess you should say. Mm-hmm. But you can just see how emotional it is. I mean, everyone just was like, yep, I'm done with this. Not going to open up Binance or check out TradingView. Just, I'm going to wait this one out. And now, people are starting to come around again. So that's how you can tell we're kind of at the beginning. Engagement's going up. So you can tell we're at the start of something here, but it's just going to be so fun to watch.
Yeah, and I want to leave you this last chart. This is the chart that Jesse Colombo had posted. It's the MSI U.S. retail. I'm blanking on it. Basically, retail commercial property index. And yeah, I mean, it's stopped out here around 1258. And I think this is something to keep an eye on. This is a monthly candle, so these take obviously 30 days or 25 trading days to close. But as you can see in 2008, it just shit the bed at one point and went down 32% in 1 month, and even more than that if you include the wick. Definitely keep an eye on this. This will be something. I think we should probably come back to this like at least once a month and just see where we're at in this. I wouldn't be surprised if this, leading into 2020, begins to tank a lot.
No, yeah, I think that's a good idea. Definitely a good idea to keep track of that.
Well, anything else you want to add in here today?
No, I think that was good.
Yeah.
A lot of good stuff to cover. I know this one talked more about real estate, but I think to really focus on that store of value use case and how things can be used as a store of value that traditionally wouldn't be used as a store of value. So you get these mispricings